This is where I think the crypto community and some of the issuers got to be careful. As a customer, you can only get two of these three things: fast, good, cheap. It's hard to get those three things in one thing. I think ETFs do.
Meet Eric Balchunas, Senior ETF Analyst at Bloomberg and one of the key figures behind the scenes of the Bitcoin ETF revolution. For over a decade, he's analyzed trillions in fund flows and helped investors understand where the smart money is going. Now, he brings the same clarity to the crypto space, cutting through the noise with data, experience, and zero filter.
I'm telling you, I dedicated my whole career to ETFs because I've seen what they can do. Bitcoin is hot sauce. But here's the thing, there is a lot of demand for hot sauce in a portfolio. Some of the numbers on volume and flows were ridiculous.
There's a very controversial topic at this point if you are a Web3 investor, which is Ethereum. What's the reason that there is absolutely zero or close to zero interest into the ETH ETF?
The reason I think that is because...
Eric, how does it feel to become the main actor during the launch of an ETF all of a sudden?
So you're talking about the Bitcoin ETF, obviously.
Yeah.
It was unusual. I told my colleague I felt like he and I were. It reminded me of 2012 Nate Silver, when people were looking to him for like odds on like whether Obama would win. It felt like the crypto community was looking at James and I for like all the information we could about what the SEC was going to do. What does this document mean? What's going on? And we were happy to play that role because it expanded our audience, and there wasn't really anybody else stepping up from the ETF world. So we really seized that opportunity, and I enjoyed it actually because I've been doing this for 20 years, and like there's 3 or 4 ETFs launch every day, and a lot of them are like large cap growth, options overlays, and but the Bitcoin was a whole new asset class, and so like only once a decade does the ETF like get into a new asset class, and so it also had been a 10-year story. There was just so many subplots. Who would win? When would they launch? How would they launch? BlackRock's in it. There was a fee war. There was so many things to unpack. And, for an analyst, it was absolutely fascinating. And so I spent like a lot of time on it, even though to this day, even with all the success they've had, it's like they are 1% of all ETF assets, but I spent probably half my time on them for the past year. But I'm happy to. I really, I enjoyed it. And it was, really fun being the intermediary between that whole world and sort of the TradFi ETF world, and vice versa.
How did you experience the fake approval of the Bitcoin ETF somewhere in like October of that year? I
Yeah,
think
you mean when the tweet came out from apparently the SEC handle
yeah.
a day early? Yeah, I mean, I thought it was real for about an hour. It looked really legit. But then there was a couple small things that were pointed out about the tweet that were suspect. And then Gary Gensler himself put a tweet out like within a couple hours saying that tweet is false. We haven't approved them yet. But here's the thing. We had pretty good, you know, we had a pipeline into some of the chatter, and it seemed very positive. Like we were pretty sure they were going to approve. It was a day before. So it wasn't, it was that's why we thought it could be real, because we were expecting the approval, but it looked like it was just some, what do you want to call, like jokester or whatever, some guy in Alabama, apparently like a 24-year-old who was, I don't know the whole story, but they caught the guy, and it was just, it sounds like it was some, I don't know, someone trying to like pump the price up real quick or something. And but they're dealing with I believe it's the FBI, but they have been found, and I don't know, the whole thing was just kind of wild, and it was par for the course. The whole thing was like a big roller coaster ride, one day to the next, this filing, that filing, this one's withdrawn. It was just like, it was like being on a roller coaster. And so for the roller coaster to have like this final crazy, you know, curve up and down was just normal. And so it kind of fit the whole year to have this last minute drama. And then the next day, of course, the real approval came out, and it's all academic now.
I mean, I think for myself, for a lot of Web3 crypto native people, it's a whole new space that opened up with all the filings and all the required documents and all the stages of actually an approval. But then the Bitcoin ETF came in and it was received way more positively than most of the people were expecting it to be. How, if we compare that to nowadays, how do we value the Bitcoin ETF in terms of, well, flows compared to how it used to be?
So the flows were they were big the first couple weeks. I mean, really
Hmm.
big. It was like, wow, these is big success. Some of the numbers on volume and flows were ridiculous, especially as a group. If you added them together, they were bigger and stronger than any launch I'd seen ever. Then there was a dip down around April. So they launched in January, had a good first 2 months, and then around April there was a decline in Bitcoin price. The flows sort of stagnated, and I thought, okay, well that's it. They'll just kind of live around this like 8 billion net flow area for a while. But then June, like early summer, they really ramped back up, and the flows got really good. And so all told, that happened like 3 times. And so we came up with this phrase: 2 steps forward, 1 step back. It it feels like this category is gonna be built like that. There's gonna be like these, you know, time of a run up, a lot of inflows, and then there'll be like a pullback. And right now we're in a little bit of a pullback mode, but we had a lot of steps forward with last year in the election. So I think it's going to be like like sort of like this. And so this is a pattern that I see playing out. But I will say this: in the first year, they took in 12 months, they took in 38 billion net inflows. That is the most important number because that number is the net number of new cash invested, and you can't fake that number. Assets can be a tricky number because assets can be the flows plus if the price goes up. So I want to strip out market appreciation and just look at, did people buy it? So 38 billion was the net number after a year. Our estimate was 10 to 15. So this blew away our high end by double. And I'll just leave it at that. And we were pretty bullish, I thought. I remember when it came out, some people were like, "Who would even buy this? Like, people can just go to the Coinbase or whatever. What's the point?" But I'm telling you, I dedicated my whole career to ETFs because I've seen what they can do. They are like the Amazon of investing. They make everything fast, good, and cheap. It's just the value proposition is so strong. They remove all friction, basically cost nothing. There's just so many value adds to the ETF vehicle that whatever you put in there, you're going to get some bites. Now, I just didn't realize how many people wanted Bitcoin. I maybe we underestimated that. So for it, and even with the recent pullback, that 38 billion number, I think it tweaked out. It got up to 40 at one point. Now it's 36. Still though, 36 billion net after everything's said and done is astonishingly good. And I only see it building from here, but it won't build up in a straight line. There'll be these pullbacks now and then that'll, they'll never, for the Bitcoin people, they're never easy to stomach. I'm a little removed from it, so no big deal to me, but I think they're just par for the course, and the flows will somewhat move with the price.
And I mean, there are two things on this, which is what drives people to, like, let's say, what are the categories of participants buying the actual ETF? Because back in the day, I think almost everyone in Web3 are praising self custody. But now the topic starts to fade away into, well, maybe if I have a very liquid asset that I don't need to store myself, have exposure to Bitcoin, that's also fine for me. And I don't actually have the security risks. Is that one of the categories that you, from your experience, see jumping into the ETF? Or is it just plainly institutions saying, I want to have an allocation to true and regulated asset class?
Yeah, so I think that the if you look at who the investors are, the early investors were small retail investors and advisors who were just into Bitcoin already. And I think advisors, they don't want to hold Bitcoin on their own because they can't really custody their own assets. There's some legal issues around that. So they love ETFs because the ETFs custody the assets for them. So if you were an advisor and you were pro Bitcoin, which there are many, just it was a minority, and the ETF came out, you're all over that. So you bought it quickly. You're an early adopter. Then there was the hedge funds that came in and did a basis trade where they would short the futures and buy
Mhm.
the spot because the futures were always trading at a premium. And that trade brought in about, I think, $20 billion of hedge fund money. And that money also sometimes is moves with the price. So the basis trade was drawing in hedge funds. And then you saw a couple institutions like Michigan, I think, Wisconsin, something like that. You even saw an endowment. Emory College bought some. So these bigger asset owner institutions, they're usually they're like big fish. So they're harder to catch. They take longer. They sniff the bait more. So the little fish bought early, and then the big fish started to buy a little later. And I just think you're going to continue to see that. The advisor space is one that is the most interesting because if you take all the ETF assets out there, advisors are probably 70% of the users of all the assets. And so they're the primary customer of an ETF. And so that market is going to move in a pace that's medium pace, but they do get hurtish and they do worry about career risk. So there's definitely going to be some moments where the advisor will be like, I'm kind of into it or I don't know, but I don't want to be left behind if it does go up a lot. I don't want to miss out. So there's going to be like a tipping point where I think they either, decide to come out of it or go in, but by all intents and purposes, it looks like they'll slowly adopt it. I think more and more it's looking like a typical portfolio is going to be like not 60-40 exactly, but maybe like 50-30-20, and the 20 will have a lot of like hot sauce stuff and solution oriented stuff. And I think that's where a little Bitcoin will fit. And I think that's ultimately where advisors will land. Some are just hate it. Like there's definitely like a group of people where I don't regardless of where you are, what job you have, something about Bitcoin just pisses you off and you think it's a scam and you're over it. And those people will never allocate. And I think they'd probably even talk their clients into not allocating. And that's just a fact. And there'll be some institutions like that and there'll be some retail like that. So, but the ones that were or were into it beforehand, they probably already bought it. But then there's a lot of people who will be like open-minded. And then I think some of those adopt, the big thing here is BlackRock and Larry Fink, and to an extent, Fidelity. You have to understand these advisors, they trust these companies. BlackRock is the biggest asset manager. Larry Fink is now basically giving them permission to buy it. Fidelity is another one. That's a very, very old guard legacy company that I would say they're not old guard. I mean, they've just been around a while, but they're moving quickly into the crypto space. They've done a couple other things in that crypto space as well, like tokenized money market fund and stuff. And so I think BlackRock and Fidelity give a lot of cover and make it seem legitimized. That we had said on the team many times that BlackRock and Fidelity kind of by getting the ETFs out there and voicing their optimism around it, they completely removed the stench left by FTX. So you went from like FTX and this like smell and negativity. And then over the 2 years, I think BlackRock and Fidelity have successfully removed that. I mean, nobody's even talking about that anymore. And so the mainstreamization and legitimization that BlackRock and Fidelity brought in is only going to help. And these two companies really want Bitcoin to succeed because Vanguard doesn't play here, and that's their big competitor. And so they see Bitcoin as a product that they can have that Vanguard doesn't. And so their vested interest is to keep selling it. So you've got all these really smart wholesalers, all these advisors. That's why I told people, don't bet against that. Like, even if you hate Bitcoin or whatever, like, don't bet against the ETF and don't bet against like BlackRock and their wholesaler army. Like, I was always bullish that, and that turned out to be right. But some people, they kept trying to minimize it and be bearish, and all their takes did not age well because those are some powerful forces behind it now.
I think Web3 really thinks that everything belongs to Web3 and Web3 moves Web3. But once the big institutions step in, like BlackRock, I think the whole dynamic changes and they decide where the markets are going to go to anyways. So if they start to become positive about a certain asset, that's usually where you need to be, at least from my understanding, a little bit more sharp on what they are bringing out and what trajectory they are planning for themselves when it comes to Bitcoin and crypto. And one of the reasons retweets you've done is about Fidelity, which is rolling out crypto for IRAs, or the ability to have crypto in your IRAs. In what type of magnificence or like magnitude of impact is that when it comes to the future of allocating assets through your IRA into crypto?
Yeah, what's the decision-making process for an RIA to do that? Is that what you're
No,
saying?
like if that is possible from a retail investor or anybody, that they can just go to Fidelity and say, "Well, I would like to have crypto in my retirement plan," and that is now possible. How big of an impact would that be for an asset class that like crypto?
Yeah, again, huge. The Fidelity RIA thing is, big. I think the ETFs are bigger because the ETFs make it readily available to anybody, anywhere, anytime.
Hmm.
Fidelity is one platform, and they do have, I think, like 30 million people on their brokerage site, and some of them use the RIA. And I think this is a clever way to get some younger people into their wealth management business. So it's only going to help. But and look out for Schwab to do something similar. Schwab and Fidelity are like mortal. They really big competitors. And Schwab and Fidelity again, they are the biggest two like brokerage platforms, and so whatever they get into is big. BlackRock is big, but they don't have like a platform like that. They don't do the advisory thing. They sell the products to the advisors. But Fidelity and Schwab are interesting in that they make ETFs, but they also they're like you go to the supermarket, they're kind of like the supermarket, but they also have like the name brand, sort of like the ShopRite brand stuff. So they do everything, and that's why they're really important. But I still think the ETF is probably still the bigger story, simply
Mm-hmm.
because there's more issuers. It's way to get out more. Fidelity is just news for the Fidelity client and their clients, but look, the the bigger takeaway here is that you have a very serious company that's built up a lot of trust who is now getting behind this thing. So you're gonna borrow the Bitcoin concept is gonna borrow some of that trust, and that is major for trying to get money from average investors in the TradFi world, right?
If
Because a
we,
lot of
if that is,
these hardcore Bitcoiners, and they're like, "Whoa, it's a little crazy." I mean, you have to admit that, yes?
yeah, I do. But like back in the day, a lot of Bitcoiners were against Wall Street, and now all of a sudden we're cheering having them on. So a
Well,
lot of
by the
things
way,
have changed.
this is such a good point, this tension between, "Oh my god, number go up," and then, "Wait a second, BlackRock's literally Wall Street. It's literally TradFi. Are we really, like, selling ourselves out?" Um, it's funny, I remember, I'm a Gen Xer, and when I in the '90s, we were into all these really cool bands, and there was this whole thing about selling out, and, like, it was like, "Oh, they were such a good band, but they went to a major label. It's over." And there's something about Bitcoin that feels like that, and, people who are from that community are probably gonna miss the days that it was just this small little scene of, like, true believers, but they also probably are happy that it has been adopted. I remember I would get into bands early and then see them on MTV, and there was a sense of pride that I was early, and I was glad to see their success, but I also was like, maybe, you know, missed it a little bit that it was my own little thing for a while, where it felt like that. So this is what happens to things that are successful. They eventually go into the mainstream and become adopted. So I would say the only thing about the decentralization is the more that you give it to BlackRock and Coinbase, the more it is a little centralized. But on the flip side, that doesn't that doesn't alter the fact that you have all these computers around the world, these nodes, and the government can't kill it. Like, so even if BlackRock is a big holder of that, a lot of them, of the lot of the Bitcoin, right now they hold as much as Satoshi, like about 1,000,000. You can't that doesn't change the fact that it's still decentralized concept. Sailor owns a ton, but it's still decentralized. So I think over the years, you're going to find the ETFs will hold more and more. But all the ETFs are doing is basically like doing the pain in the ass work of like getting the Bitcoin for you and storing it. And that is what banks do. It's just what a lot of people are not that into there's definitely gonna be a lot of people who are not totally true believers and want their own wallet, but they do want to be involved. And I, I I don't judge that, but I think, the not your keys, not your coin people, if you even say that phrase, if you've ever uttered the phrase, "Not your keys, not your coins," you should probably get your own wallet. Like, you would not be happy with BlackRock or Fidelity holding it, and that's fine. And I think people who buy the S&P 500 or they buy a junk bond ETF or they buy a Bitcoin ETF, none of them really want the things back. They want someone else to take care of all that investing for them. They just want to buy the 3 tickers and be done with it. Then when they sell, they want dollars back. They don't want the Bitcoin back. They don't want junk bonds back. They don't want S&P 500 stocks. So for normal investors, adding a little Bitcoin way easier with the ETF, and they'll do that. But
Hmm.
and it maybe some people get into it and they actually become Bitcoiners just by learning more about it because I'm a little like that. I still don't think I need my own wallet, but I've learned about it and I get it. I get it way more than I did. And I understand many of the points for it. Um, but I'm still I don't think I need my own wallet. I don't trust myself to remember 12 words for the rest of my life. I don't, think that the government's gonna confiscate the Bitcoin, gold in the '20s. I don't go that far, so therefore, I don't think I need a wallet, but I think that if the idea of tokenization where everybody could have a wallet, and if that grows, that may be also how people might come off the ETF and just use Bitcoin directly because, oh, I have my own wallet anyway now for all these tokens. Bitcoin just put it right in there. That would make the ETF somewhat obsolete. But my guess is that the tokens would be managed by BlackRock anyway or Fidelity. So there's a lot going on here, but there's just going to be people who just like don't want to deal with the hassle, any business. A lot of people get Uber Eats delivered to their door, you know? It's just like, there's levels of laziness here, in terms of being a customer.
And I think the majority of our society is just not made for self custody in the first place. I think there's a small echo chamber that says, "Yes, let's go and have it on in our own wallet." But it's a well, having a ledger, having all the words, need to store it safely, connect it to a computer, then transfer it through the Bitcoin network, buy your Bitcoin on your own. It's a lot of steps that people need to make, which on every step people just step out of the game. So I think that there's a way bigger market for anything related to ETFs or liquid products that you can easily swap into different assets as well. Where you could just go from Bitcoin ETF to, let's say, China, whatever it is, or just regular stocks. It's super easy to do it within one platform, right?
Yeah. I mean, like I said, we have a I opened my first book I ever wrote was about ETFs, and I opened it with the fact that as a customer, you can only get 2 of these 3 things: fast, good, cheap, right? If something is fast and good, it's probably expensive. If it's cheap and good, it's probably not fast. You get the idea. It's hard to
Hmm.
get those 3 things in one thing, and in the book, I said that, certain restaurants, I think, give you fast, good, and cheap, um, and then I think ETFs do. Amazon, I think, is like that. There's a few things you can get all 3, look out. So for most people, you click a button, you own the thing, and it barely charges you, and it's good in that you can trust the company and it's regulated. So it's a solid value proposition, and that is really powerful. And I actually go to these Bitcoin conferences and I give presentations about this, and I try to explain that the ETF, what I just told you, is a powerfully disruptive concept. And I say that Bitcoin and ETFs are a disruptive power couple because Bitcoin also is a disruptive concept, and so are ETFs. Wall Street doesn't love ETFs. They don't make that much money for the issuers. I mean, they're all very cheap. They'd rather sell you mutual funds or annuities and shit like that. Wall Street doesn't love the ETFs being popular. So it's not because sometimes the crypto people will kind of peg me as like boomer tradfi Wall Street, but I'm like, honestly, ETFs are just as punk rock, if not more, as the Bitcoin stuff. And that's my message to them. And I think they get it. I think they understand that like you got a little lucky that the ETF world wanted to include you because the ETF is so powerful as a um, way to get your whole portfolio with literally clicks of buttons. I mean, it's that easy to get a fully diversified portfolio of anything under the sun, and it all trades on the stock exchange. It's regulated. It's dirt cheap. I mean, it's all there, and that's a mighty powerful value proposition. Not to mention the lack of friction, which is increased in Bitcoin. But I'd argue, like, if you buy an S&P 500 ETF, you could buy all 500 stocks on your own. A, you'd have a long list. B, you'd have to figure out, okay, this stock had a dividend. What do I do with that? Do I reinvest it? This stock had a corporate action. The index booted out this stock and added this stock. All that shit is something the ETF takes care of for you. And so there is a lot of outsourcing that goes on all across ETFs because a lot of that stuff is a lot of legwork and a lot of friction. And so Bitcoin is probably an extreme example of that. Gold's another one. Who wants to buy a bar of gold and then store it in a safe? Just buy the gold ETF. So anyway, I would again I just told the crypto people give ETFs a lot of respect because they will surprise you to the upside.
If we there's a topic that I would like to discuss, but it's coming up a little bit later, I guess. First thing, you mentioned the gold ETF. Since Trump got into the office, gold has been going up, I
Hmm.
think, the fastest ever, uh, probably 16% or so, and Bitcoin just dropped by 20%.
Yep.
Do you see anything in the data from the flows of the ETF that there's a correlation between the two? Because certainly a big difference in terms of risk appetite owning gold ETF or owning a Bitcoin ETF.
Um, yeah. So this is a great point. I don't think this is where I think the crypto community and some of the issuers got to be careful. I would never sell Bitcoin as a hedge to the stock market. To me, it moves much more like like a it's actually like a what we call high beta, meaning
Hmm.
like it's like it moves like a tech stock. So like if the market goes up, Bitcoin goes up more.
Yeah,
Market goes down, Bitcoin goes down more. It's like got a little it's tethered to risk, but it's even more risk. What I call all of that high beta is hot sauce. And so to me, Bitcoin is hot sauce. But here's the thing, there is a lot of demand for hot sauce in a portfolio. So over the past 30 years, a lot of investors stopped dating active managers in this fund, out of that fund, whatever. And they were like, oh, I can get my whole portfolio for like 5 basis points fee in Vanguard. So they get married to Vanguard, and the low cost indexing concept is a big hit. So they have these cheap ETFs in their core, but it's boring because they're going to just wait 30 years, right? So they
yeah.
looking to decorate the portfolio with stuff that's completely opposite, like really speculative stuff. So to me, the fact that it is high beta is actually a feature, not a bug. Now, in my opinion, it will not hedge or hardly anything. What it does hedge though is the global money printer. So over time, it should be something that can't be printed away. You can't dilute it. And over time, that should be somewhat of a hedge. And there's where the store of value comes in. So I think if you look at it as a store of value, but one that is hot saucian versus gold, which is I mean, gold moves like this. It's very tame. Then you can't get hurt. And I think it's the way to look at it. Gold also, you got to remember, is 4,000 years old. Bitcoin's literally 16-year-olds. So I say Bitcoin is gold as a teenager. and if you go back to like, if you ever, 16-year-olds, they're very volatile. They got attitude, they screw up, there's just a lot of teenager attributes to Bitcoin, in my opinion. And if you go in looking at it like that, I just feel like, there's no surprises. But I would sell it like that too if I was one of the issuers. I wouldn't sell it as a, I don't know, hedge to the stock market, because it's not. It really, you can't trust it. And gold this year, let's face it, big W. I mean, it went up.
Until date.
Yeah, gold zero correlated, so it wasn't guaranteed it would go up. But, treasuries are more inverse correlated to stocks, but gold's like zero, so you don't really know what it will do. But it actually, because it went up and Bitcoin went down, I don't blame the gold people for taking a victory lap. You got to just tip your hat. It did hedge everything this year, and it looks like a real safe haven. Bitcoin doesn't, and that's just. But from everything I said previously, that would be my argument against that. But um, it's hard, Bitcoin still destroys gold in performance since the ETF launched. Like this little run up in gold this year, it doesn't even almost the mouth of that lead is just like this now. It's nowhere even near close. So gold was kind of due, I think, also. But um, I think you gotta acknowledge that gold has had a big win this year, I think, and looks really good. It's a good look.
During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they are giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin. To be fair, it's since the end of 2022, I think that was the period where gold has bottomed in that corrective period. It nearly doubled in 2.5 years. But then, as a comparison, Bitcoin went from 15,000 during the FTX collapse to, what is it nowadays, 80, 85. So Bitcoin is still providing that higher beta, but when do you expect Bitcoin to, or if there is any moment that Bitcoin is more or less a store of value and starts acting like gold? As a lot of Bitcoin maxis would love to see that, but ultimately it's still, if Nvidia goes up, Bitcoin goes up. That's just the trade currently.
The answer is I don't know. I would almost default to you on that, but um, maybe 20 years. I don't know. I mean, the more of this institutional adoption and ETF adoption that comes, I do think the less volatile it'll become, because a lot of these ETF people, they're not fickle. They're not going to, go buy and sell it. And so it's like, even in the last sell-off, only 4% of the ETF assets left. So 96% of people stuck in there, and institutions understand behavior. So I don't know. I think if anything, there's this constant like leverage trade around it with these like options. I mean, these derivatives and like Asia and shit. There's so much high level leverage trading around it that I'm not sure how you get rid of them. But every time it goes down and I don't see really ETF flows, I'll ask people like, why, who's selling? Is it the natives, the hodlers? And like, no, it's a leverage flush. And I'm like, okay. But you start looking into that and you realize there's just so many derivatives now connected to it, and people love leverage and volatility. So you've attracted like a lot of just degenerate traders. And I think over the years, maybe they get bored, and because the volatility gets lower, and then you might be more in the gold territory. But um, like I said, I wouldn't necessarily worry about that, because there is a huge market for hot sauce and to spice up a boring Vanguardian portfolio.
Yeah, well, I mean, there are a lot of Web3 investors and traders that would like to use a lot of leverage on an asset that is very speculative in the first place. So you go to a random crypto exchange, you can trade up to 150x on the base asset if you want to, which is
Yeah.
I think from your experience, is completely wild.
Yeah, I mean, that is crazy, and, like, MicroStrategy is also, like, a leveraged Bitcoin trade, and then there's 2x MicroStrategy ETFs. So, there are all these, like, things attached to Bitcoin now that make it go up and down faster, quicker, and aren't really part of the holder community or the ETFs, and I guess that's just
Hmm.
the way it's gonna be for a while. It's a little beyond my scope, but that's my read on it. But
Yeah.
right now, I think 6% of all, no, 5%, no, 6%, something like that, of all Bitcoin is held by the ETFs. And then I think Sailor's another 4%. So like they're 10 together and they're not really selling, right? But a lot of Bitcoin's been frozen and like lost. And Satoshi's not selling his. So you are looking at maybe if you say half of the Bitcoin is just out of commission. So then the float or the tradable half of Bitcoin, you're looking at the ETFs and Sailor having 20% of that half. So then you're looking at, if as that number grows and grows, there should be less people doing the trading. I would assume, but
Yeah,
we'll
you
see.
in one of the I did my research before we went into this conversation, and one of the things you mentioned is that you expect the group of Bitcoin ETF to be triple of the gold ETF at some
Yes,
point in time.
I do. Yeah,
Why do you think
because
so?
yeah, well, gold's 130 billion, something like that. Bitcoin got up to 130. It's now down to 100 because of the price depreciation. But the reason I think that is because, like I said, most ETF portfolios are built today like this: 60% stocks, 40% bonds. And the bonds are heavy treasury. And so stocks go up, bonds go down, stocks go down, bonds go up. And these two are hedging it. You've got your diversification covered. You're good. And all you do is rebalance that once every 2 years, and then you have to wait 40 years because you want compounding. And so the whole idea is to never sell that. I think there's just more opportunity for something that can be speculative, something that people can go, okay, I got the boring vanilla serious stuff covered. Like I don't need to worry about those names anymore. What's out there that I can like buy that might do well, like a lottery ticket type thing? And so there's people who will, and also they get bored, right? They want to scratch that speculative itch. So I think that this speculative hot sauce bucket will always remain 10-15% of the flows. And that's a space where you have single stock ETFs, leverage ETFs, ARK, Kathy Wood's funds are in there. They're like very high growthy stocks. Thematic ETFs, Bitcoin, all crypto really would be in there. There's some other kinds of weird strategies that I would probably add in there. And I think a lot of people are like, I just don't want to kick myself if this one thing gets really big. Like some of Kathy Wood stocks are like, oh, they're going to have robots and like, robo taxis and the medicine industry is going to like be well advanced. And some people are like, just want to make sure that they are participating in that potential massive upside. So I think that Bitcoin being this sort of potential future payday is more stronger right now for the modern portfolio than is gold as a way to somewhat like fight and hedge against inflation. And the other thing is, at some point, gold will do the wrong thing. Like because it's zero correlated, there'll be a time where it just doesn't do what you want it to do, and it's just and that idea of being an alternative, there's just less people looking for alternatives. And I know this because there's hedge fund like ETFs that have alternative return streams and nobody cares. So the alts in the ETF world are tiny. Nobody cares. Hot sauce way bigger. So you'd rather
Hmm.
be hot sauce than an alternative, in my opinion, if you're looking for a bunch of money, because that bucket is bigger in the modern ETF portfolio. That said, some institutions do look for true alts, and I think gold has a bigger play there. So ultimately, because the place where hot sauce goes is bigger than the place where alts goes, I'm just forward tracking that. And further, if Bitcoin can get tie gold in its first year, I
Hmm.
mean that's amazing. That's like early Tiger Woods type shit. Like, you're like, "Wow, if that guy can do that in this first year as a pro, imagine what he can do." And so I have to give a lot of props to that first year and that asset collection and be like, if they can do that in a year, they might not do it in 3 years, but ultimately I have faith they can grow more.
Yeah, we can also talk about golf for a few hours if you want to. The Masters are coming up, so it's gonna be fun there. But when we talk about hot sauce and altcoins, then there's a very controversial topic at this point if you are a Web3 investor, which is Ethereum. We
Yeah.
have the Ethereum ETF, which I think based on the Bitcoin ETF launch, it had massive expectations. And then it kind of like died down and nobody is caring a lot about Ethereum. The price actually fell down quite a lot in the past quarter too. What's
Mhm.
the reason that there is absolutely zero or close to zero interest into the ETH ETF?
Um, what do you think? What do I think Ethereum's gonna do?
Yeah, the Ethereum ETF.
I think that they're going to struggle. You know, it's I got in trouble because I basically said that Ethereum was kind of like the opening act, having to follow the headliner because it came out after the Bitcoin ETFs, and I got a lot of the Ether people are sensitive. Um, I don't know if you are you like do you like all the coins or just one?
Yeah, well, I mean, I just saw a tweet from you the other day that there was a new filing from SUI coming in, the SUI ETF, and you had to Google what SUI was.
Yes. Yes.
And I think in the past few months, there's like, I saw something like a bonk ETF even
Yeah.
coming in.
Yeah.
It's
No,
like,
it's
that's a
like
different topic than Ethereum. Ethereum is a
I gotcha.
platform
Yeah.
that's being used, but yeah, it's getting wild. I mean, how do you like keep on navigating through that sort of mess of crypto ETFs that are coming in?
Yeah. Um, as you know, we have a phrase, the further from BTC, wait, well, let me get it right. The further you get from BTC, the less assets there will be.
Good one.
You like that?
I
So
like that. Yeah.
it's sort of like gold, then you have silver, then you have platinum and palladium, then you have some of these like futures commodities like coffee and corn. The commodities category played out the same way. Gold has like 80% of the assets, silver 10%, platinum, palladium 2%, and then the other ones are fight over 5%. I think you'll see the same. I just think Bitcoin is by far the most desired one. I think most normal people are happy with Bitcoin being their whole crypto allocation. That said, if one of these Ether or Solana gets like some big news, like it gets adopted by certain corporations, like, one of these could be plucked. So I look at the other ones almost like a basket of tech stocks. You don't quite know. One of these could be the one that really does well. And so you could find a basket, like a crypto basket ETF finding an audience because people are like, I just want to own them all because I don't know which one's going to succeed. And if one does sort of break away from the other ones, you could see some people allocate to it, like a Solana or whatever, SUI, whatever, SWI. And then there'll be these novelty meme coin ETFs that, well, they won't do much, but it gets silly sometimes. One of them will do something crazy, and there could be like a whole thing around it, like Doge or Trump coin or something. And that'll be a sideshow for a while. But again, all of this will be nickel dime compared to Bitcoin spot. That's the real deal. And I just look for that to get 75-80% of this category, even if we talked again in 3 years.
And if staking is going to be integrated into, or the returns of staking is going to be integrated into ETH, is that going to have any sort of difference? You feel like?
A little. I don't. It's only going to help. I mean, it can't
That's
hurt.
for sure. Yeah.
Um, the bigger problem with Ethereum is performance, right? It just doesn't ever go on a nice long run. When it did go on that run for like a month there, it did well. It got more flows. So Ethereum needs like a multi-month run and a good narrative. I don't know exactly what that is, but it needs something that's a little more than just some like a good week here and there. But when it launched the Ether ETFs, the price went down quickly, like 20-30%, I think. That's when you launch an ETF and you have that performance out of the gate, it's tough. Regardless of the category, we've seen it many times. When the Bitcoin launched, it actually went up a good amount, and now I think it's up 100% still since launch, something like that. So that helps a lot. Timing is important, and the Ether got bad timing. So um, I think it needs some kind of a elongated performance run.
I
I don't know
think,
what crazy causes that, but that's what it needs.
well, we don't know either. We would like to have a narrative that moves ETH because ETH has just been falling for a few years now. So I think the whole Web3 community is trying to navigate or identify the narrative for ETH itself. If we talk about the impact of the ETF and the Trump administration, uh, what are kind of the next steps that is going to be built upon the Bitcoin ETF? Is it like in a basket, as you mentioned, or is it options trading that are going to be integrated into the ETF? What is like the next step opening up more liquidity into
Yeah.
an asset class like crypto?
Well, the options are already out. That was big. IBIT has a big command on that market. So puts and calls you can now use on IBIT and all the ETF,
Hmm.
all the other ones too. But IBIT, options market on IBIT is very robust. It's deep. So all that options is good. Then you've got Calamos and other firms who have Bitcoin buffer products where they define the outcome using options. So like, oh, if Bitcoin goes down 30%, you only have to take 10% of it. And so that's one of those ways that older investors might be able to like have like a more kinder, gentler form of Bitcoin. And then there's going to be leverage Bitcoin. I know the 2x Bitcoin is pretty successful. Then there'll be inverse Bitcoin, which they have. Uh, then they're going to do like Bitcoin yield, where they write options on it to give you, so they generate yield on the Bitcoin, but you give up some upside. So anything that's successful over here, they're gonna do it to Bitcoin. It's gonna get the whole ETF treatment, which means all kinds of different ways to get your Bitcoin, and that's wonderful. That way, it's like a soda. Some people like cherry Coke, Diet Coke, Coke One, Coke Zero, Jack and Coke. What like how do you want your Coke? The ETF industry will serve it to you the way you want, and that's really good. That's again, that's super convenient. Imagine trying to do an option strategy on Bitcoin and keeping it up and all that. You don't have to do anything. You click a button and you now have this sort of package trade, which is I want my Bitcoin, but I want an options overlay, and boom, you got it. So that's the next thing. And then obviously the other next thing is just exploring these new coins. These Litecoin will probably be out next. Solana, XRP, I could see. Um, SWI, Bomb, then there's the silly season stuff, which will probably come out too. And then Lord knows what else they're going to try. And so that's what I'm looking for is those two sort of categories,
And I mean, Solana,
subcategories.
Litecoin. Litecoin is pretty much a dead coin, anyways. Um, but it's fun if that one gets an ETF. What is
Which one?
the Litecoin?
Yeah. People trash it whenever I tweet about it. I guess there's just the maxis just think it's like worthless, right?
Technically, it is. Yeah, it's called the
Wait,
Bitcoin Silver, or like
well, okay,
it's
here's the
kind
question
of.
then. Why is there a Litecoin community then? Like, what are they hanging on to? They just bought it and they want someone to like make the price go up and that's it?
Yeah, there are even communities of coins that literally went down from like 2017. There are some people that are so integrated into it, expecting that it's going to be adopted into any sort of ecosystem or wherever there is, and they just try to believe in something that doesn't exist. That's just that there are if you go deep into the Web3 space, then there are many communities like this, and they are very. It's almost like football hooligans or like rugby hooligans or American football hooligans. They are very tense into that vision. So that's I just don't get it why Litecoin should be getting an ETF because there's just no adoption on the chain itself.
Yeah.
I could get it if Solana gets an ETF because there has been in some way a lot of adoption, but also a lot of bad adoption in the sense of all the pump.fun and the meme coins that came out. but at least there's something happening there. So I
Yeah.
guess that's the difference. But if we look at Trump right now and the way he has been so progressive on crypto, what do you see has changed in the last 4 months on the crypto aspect since he got into the office?
It's interesting. Like there was a lot of hype around him and the reserve, and I get that like because the strategic reserve didn't buy new Bitcoin, people were a little disappointed. But I think in general, the biggest thing to remember is that remember how you had a very antagonistic government. The SEC was rough. All that's gone, and so you have a much more open door kind of free accepting policy from the government, and that's the big pivot here that I think is the most important thing to remember. Um, versus whether the government buys an extra, like, 400 million of Bitcoin itself. Um, so that's huge, but there are some downsides. Like a lot of people didn't like that Trump put his own meme coin out. I think that shows maybe a lack of understanding or respect for the Bitcoin concept because meme coins are largely looked down upon by like most of the um, serious crypto, Bitcoin people. So I get that. So it's complicated. There's definitely some pros and cons with everything and some hopium and then some copium going on. But overall, it's just like what I said with the ETFs. Don't get caught up on like every little detail. Don't get caught up on like every day's trading activity. Just remember you got Larry Fink and BlackRock on your team now. That should be peace of mind right there. Now I'd say the same thing. You got Trump and you got a crypto czar in the White House, and you've got a SEC chair who's into it. That's it. Just chill. You know, that's the takeaway for me, in my opinion. But I think sometimes the expectations of the crypto crowd are so lofty that they find themselves miserable, even if something went well. It didn't go well enough.
Yeah, it's a very toxic space, and there's like the Web3. Well, it's also a beautiful community, but
Yeah, I agree.
the
It's a little complicated.
yeah, there's like the sort of financial aspect of being into the Web3 space that people print the previous cycle onto this year, and they just like it has to happen in this format, and price goes up, and then Trump gets into the office, and things go a little different. They're like, yeah, fuck Trump, man. I don't like him anymore. And
Yeah,
that's kind of the tension
yeah.
that we
It's
get
like
right
a
now.
child.
But if you talk about everyday trading activity that you shouldn't be looking at it with Orange Man in the office, actually you have to. Every
Yeah,
day is kind of a mystery which is good for you, but it's not good for my health as a trader.
absolutely. In fact, if I were a crypto person, I told them this. You should only look at a rolling 12-month or 3-year chart. Like, for example, let's say Bitcoin has like a bad week. You're still up 109%, over the year, and like 400% over 3 years or 5 years. So the dip down is put into perspective. If I'm a big Eagles fan in the Super Bowl, the Eagles were up 34-0 on the Chiefs. The Chiefs scored. I didn't really get angry because I was like, "We got this. It's 34-7 now. Big deal." If I only looked at the Chiefs touchdown and didn't acknowledge the 34, I would be worried, scared, and frustrated. So the lead is always so big with Bitcoin. You have to acknowledge that when you're analyzing the situation. Otherwise, you're just going to create your own misery. It doesn't. It's. I get why they do it, but it's it's a self. It's almost like masochistic, I
Well, at
guess.
least I
You know
think,
what I mean?
yeah, I get what you mean. There's always that sort of overconfidence with the crypto people that expect a certain outcome to happen with 100% certainty, and then they kind of invest all their savings into the most random shit coins, and then they are like, well, it didn't turn out and I lose all my money. Yeah, no shit, that's the most likely outcome anyways. It's just
Yeah.
that's just the nature of most of the Web3 investors. And when it comes to Bitcoin, I think right now it's at 80, 85 grand. I think that is very positive for an asset class to just keep on growing and growing and growing. And I think the next few years are going to be absolutely great. But when we look at the markets in general, we kind of shifted from Trump is going to bring the big financial boom for everyone to we are going into a big depression.
Yeah. Yeah. Yeah.
I mean, the scorecard or like the big card where he was like, or the board that he was holding on the tariffs, which weren't even tariffs from the other countries back to the US, but just random numbers
Hmm.
based on the import and export. Oh, it's very hard to digest whatever is going to be happening in the next few months. So I'm kind of looking for your opinion on this with him being in the office and the expectations into the markets and what you kind of see everywhere happening at this point.
Yeah. Yeah. I mean, I think, look, when you see a big move like the Liberation Day and or getting a cryptos are, a lot of times you just have to give people like a year or two. Things take a while to play out. Just had an election. People voted for this. He's doing it. You know, when Obama came out with the healthcare plan, there was on the reverse. The other side was all angry, but just look, there's an election. People vote for it, and then I think you ultimately have to give the policy a chance to play out. Maybe it's better. I don't know. Um, but obviously, with trade and global trade, tariffs would slow that down a little bit, and it's also creating some uncertainty. So markets don't like uncertainty, and they don't really like taxes and tariffs. So the sell off is pretty understandable. Bitcoin is going to be tethered to that sell off for a while. But on the flip side, the worst could be over. I don't know. Like, now that all the tariffs are out there, and we now know exactly where the administration is coming from, perhaps all we'll get is good news now. Maybe we'll start hearing news about each country basically like um, making a deal. And then all of a sudden it's like, okay, it wasn't as bad as we thought. Could see that. I don't know. Or we could see companies have bad earnings and it goes down more. It's hard to tell, but I
Hmm.
think I generally am a zoom outer. I just like to take a year. Also, the markets in the stock market was up a lot. The S&P was up 20 to 25% 2 years in a row. Normally, it averages 8, 9%. So it was way above its skis for the performance that it normally gives. So it was due for a sell-off, and I think it's only down 6.5% this year. You think it's down 30. So I don't know. That's how I see all this. I'm just a lot less reactionary than most people. And we look at the flows and most people are not doing anything differently. They're buying their 60/40 like normal. So I think a lot of this is like in this media echo chamber it sounds so crazy, but like, most people aren't in the same chamber.
I think in history there has been one time where we had 4 years in a row of like double-digit growth, which was the dot-com bubble.
Hmm.
Uh, would be great to have it again and have a crypto bubble, anyways. But when we talk about the future, Larry Fink is very outspoken on tokenizing assets and basically tokenizing everything. And when we talk about fast, cheap, the things you mentioned in your book, fast, good, and cheap, then what is your view on basically tokenizing everything and just trading tokens for any asset? Or is it just too far away at this point?
Too far away. The bigger problem, like, I get it conceptually, but and I get it for things that you can't be ETF'd, but I just went over how easy it is to get exposure through an ETF. You literally just roll out of bed and click a button. I mean, and you almost get it for free. That is so goddamn easy. I just don't see what you're disrupting there. Like, how do you make that better? What I do see is potentially the back office using the blockchain technology, because there are like a lot of clunky spreadsheety kind of things that could be blockchained. That's just less exciting to say than like tokenization of assets. So I think over time we'll see what happens, but I think the back office is first to like work in some of this technology. But you'd have a tough time telling somebody they need to like sell out of all their Vanguard ETFs and get like a wallet and like do all this shit. Like I just don't see it. They're too happy. It's too good of a deal. So it's complicated to me. I am open-minded and I could see some things utilizing this technology. But I you have to tell me how it's making the end user's life better. And I just don't see how you're going to make buying, you know, all the markets across the world for like 3 basis points. Like, how are you improving that experience? I don't see it yet, but I know that over time, it's possible it happened. But if tokens were to become a thing, you also would have to move all the market makers that currently make markets using the stock exchange and ETFs and stocks and all this. They'd have to all move over to making markets in the tokens. That's not easy. You'd also have the regulatory community would have to change. You can't just throw out a token, right? An ETF has a 100-page prospectus. There's all kinds of checks and balances. You have to have a board and a administrator. Like these are things to protect investors from getting screwed, right? That's the whole point of the 40 Act and the 33 Act. They were written in the years after the Great Depression and all that, right? So I by the time the token gets through all those regulations, it's gonna cost a lot for these companies to do that. Can they really make a token for 3 basis points? Um, so there's a lot of questions for me that are no clear answers, and I don't think a normal person needs 24/7 trading, but even if they did, a lot of the exchanges are going to 24/7 anyway. So there's that.
Hmm.
Then they're like, "Well, somebody in Guatemala can't buy VU." I'm like, "All right, well, you got me." But I no, there's no money in Guatemala really. So the the primary marketplace for these assets is the US investor and the advisors who control like 40 trillion. I mean, unless you can make a value proposition to them, I'm just not sold on it taking over. But I will give it some, um, I will respect it with open mindedness and with saying that maybe there's some tougher stuff that you can ETFize that you could tokenize that you could actually try to get going, like private assets or
Yeah.
artwork or I don't know, investment into a sports franchise, something like that would be pretty cool. But again, can you buy that without it being regulated? Probably not. The U.S. is well, with this SEC, maybe it'd be easier. But anyway, those are my questions that aren't quite answerable yet.
I think it's a fair question to say. I mean, the ETFs in itself have almost everything that a crypto investor is looking for anyways. It's very liquid, it's super easy. You can swap between assets. And the only reason to tokenize everything is to have liquidity on private assets becoming more efficient, or you can basically tokenize all the stuff that you have and use it as collateral to invest into other assets. That makes sense too. But it's kind of relatively limited at this stage as of yet. So we'll see. Going into next year, what are the most likely sort of ETFs that you expect to come out? Or what is your expectation for the next year?
For ETFs in general,
The crypto ETFs I'm talking
yeah.
about.
It's tough. Again, what's the stock market do? Let's say the stock market's down 20% this year. It's going to be tough. If the stock market stabilizes and maybe flatlines or goes up, it should be good. But overall, I'm very bullish and positive on Bitcoin ETFs and all these new crypto ETFs will come out. And even if they come out and they're like coming out in a sort of bearish, rougher market, just give it time. Sometimes ETFs come out and it takes 3 years before the environment is right for them. So over time, I think I'm looking for a lot of new launches, a lot of experimentation. Some stuff will go away, but ultimately, I see broader adoption, generally speaking. But the fickle trading money will move with price. So if price goes down another 20, 30%, look for some more outflows, but they'll come back when the price bounces. So I just don't have a price prediction. So I would just say that the ETFs in general are going to move with price to a degree, but over long stretches of time, the net flow number will be positive, in my opinion. But like I said, it might come in 2 steps forward, 1 step back increments, not all green all day every day.
Well, Eric, I must say that I've learned a lot from you in the past few years when it comes to stuff that I haven't been watching really as a Web3 investor. For me, it was just number goes up, and now all of a sudden we need to take into account ETF flows and all those things. Um, what are you working on that we can expect in the upcoming year? And if we want to understand more anything surrounding everything on ETFs, where can we find you?
Yeah, Twitter or X, I'm at Eric Balchunas. That's a way to get me for free. I also have a podcast called Trillions, which you can get on Apple or Spotify or wherever. That's also free. And I have a TV show, ETF IQ, every Monday at noon on Bloomberg TV. Those are all free ways to get me and my research.
All right. Thank you very much for being here, Eric, and good luck with Trump being in the office, getting everything documented, and
Yeah,
just
never
trying
a dull
to
moment.
stay sane.
Yep. Thank you. All right. Take care.
Take
Bye
care,
bye.
my man.